This year, the global financial services regulatory outlook is impacted by volatile geopolitics, rising energy costs, and rampant inflation.
The spillover regulatory effects of high-profile bank failures in 2023 are also anticipated this year and beyond, but it's not entirely unfavorable.
For example, more global regulatory reforms are taking shape to address the impact of the TBTF dilemma or the perception that the banks are too big to fail. This theory refers to the situation where interconnected financial institutions have grown so large that their collapse could upend the entire financial system.
We drill down into the 2024 EY Global Financial Services Regulatory Outlook Report, which highlights areas of long-standing regulatory interests. Among the priorities covered, we've pinpointed 5 trends for banks and financial institutions this year.
Number 1, digitalization of finance and use of artificial intelligence. With digitalization becoming the norm, some firms struggle to update legacy systems, leading to greater regulatory scrutiny. This challenge is not limited to banks, but also applicable to other firms. This year, regulators will continue raising the standard of operational resilience, particularly in the areas of technology and digital, requiring firms to reduce deficiencies in IT outsourcing, IT security, or cyber risks and data governance. While regulators continue to refine their approaches, firms should develop framework and governance mechanisms for responsible AI principles.
Number 2, environmental, social, governance, or ESG. There is a greater regulatory oversight on ESG-related reporting and disclosures, as well as climate risk management and stress testing. Financial regulators worldwide are focusing on net zero transition planning, with a growing supervisory focus on carbon markets and addressing greenwashing risks. In 2023, the International Sustainability Standards Board, or ISSB, issued sustainability disclosure standards. The Philippines plans to adopt these disclosure standards.
Number 3, adoption of open finance and cross-border payment integration. In the Philippines, the BSP launched its Open Finance pilot project in 2023 and has updated its Open Finance roadmap. This marks the next phase of implementation in the country. More and more jurisdictions worldwide are expected to adopt and expand their open finance frameworks and facilitate seamless cross-border transactions. One of the recent developments that can set a model for collaboration within the financial sector is the linkage of Singapore's Pay Now with India's UPI and Thailand's PromptPay.
Number 4, persistence of financial crime and fraud. Financial crime remains a priority for regulators. The increase in scam payments signals an urgent need to adopt new tools and regulatory compliance mechanisms. Firms may need to consider using more sophisticated technology, such as AI-powered solutions.
Number 5, board and management oversight. Supervisory focus and scrutiny will increase on firms' board and management oversight. Firms will need to consider how their performance and incentive structures work, and whether their fiduciary duties are aligned with stakeholder goals. Firms should also consider the issues of board and management oversight with a fresh eye instead of just relying on established practices.
At SGV, we're helping build a better world by helping banks and financial institutions realize their full potential.
Our comprehensive suite of services is designed to help you achieve compliance, minimize risk, and fast-track growth.
SGV. We nurture leaders and enable businesses for a better Philippines.